Welcome to the presentation of the first half year 2022 results. My name is Felix Strohbichler. I am the CFO of Palfinger AG. First of all, let me quickly recall what Palfinger is all about. We have a revenue of about 1.84 billion in 2021 as the number one in lifting and crane solutions. We are represented in all regions worldwide with around 31 production sites. And what is even more important, with 5,000 service hubs, we have a clear USP over competition. We employ around 12,000 people around the world. Our revenue split is 60% roughly EMEA, around 22% North America, and 5 to 6% in the other regions. If we have a look at the customer segments of Palfinger, we can clearly see that Palfinger is quite diversified. So we are supplying to plenty of industries, above all construction is a very stable industry which has been very successful in the past years. And despite of the fact that we now see a certain decline, we still believe that in the long term, due to infrastructure projects, this will be a very positive segment. On top of this, forestry, recycling, offshore wind, railway, a lot of industries we are working for with a positive outlook really make us quite resistant to difficult economic development. Very important for Palfinger is also our commitment to sustainability. Recently, we have introduced a Sustainability Council, which means that there is one group of very senior managers not only responsible for implementing the group strategy on the business side, but combining it also with the sustainability strategy, because in the end, sustainability is about doing sustainable business and not doing things next to strategy, but linking those things together. And clearly we are focused on reducing emissions in the whole value chain, safety and healthy on all levels for our people, but also for our customers and the whole environment. And last but not least, governance, transparency are very important values for Palfinger. If we then look at what were the highlights of the first half year, let me point out that despite of a difficult environment, we managed to achieve a record revenue and also record order backlog. Of course, the unstable supply chain was a very important factor in the first 6 months, which also led to very high stock levels. And obviously, the Ukraine war and rising material costs were a major impact in the past month. If we now go to the segment sales and service, again, record order backlog, but we clearly have to say that the market demand slows due to the global economic development in the last few months. What also is important to mention is that we had quite a significant growth in turnover, as you will see in a minute. This was not only impacted by output increases, but also by price increases to quite a substantial effect, and also exchange rate effects. A very important development for Palfinger was the introduction of dynamic pricing in the previous weeks, which will come into effect with January 2023. This will allow us to pass on volatile cost developments or cost increases with a much shorter lead time than in the past. So up to now, it was a problem, so to say, to pass on cost because of the long-lasting order book. Now with dynamic pricing, we can pass on cost developments within a few months only. I already mentioned that stock levels have been a problem on the one hand for finished products due to the fact that chassis trucks were not quite reliable in deliveries, and deliveries were even on hold for some weeks due to the war of Russia and Ukraine. And last but not least, I would like to mention a market success we had in the marine region. We reached a framework agreement with AKBP for delivery and maintenance of remote controlled offshore cranes. So this is really the future of the unmanned oil platform with the respective crane solution. And this is a very high-end product, which will also create synergies for our other product lines. If we then go to the segment operations, obviously material, personnel, and capacity bottlenecks were a difficulty in the past months. This also led to a temporary production cuts in the EMEA region, but still we could reach an output at a quite good level. Material costs were even worsened due to the Ukraine war. So everybody expected that at the beginning of the year, we should have seen the peak and material costs should go down. With the beginning of the war, this peaked again to an even much higher level. The supply chain problems became even worse, but still we could manage this quite well. Also in production, we had high stock levels. On the one hand, voluntary increases because we increased the safety stocks due to the overall development, but also involuntary increases because of inefficiencies at the production, inefficiencies of supplies. And last but not least, I would like to highlight that we had a record revenue and also record profitability in production for third parties. So Palfinger in some factories, we are producing for other producers of machinery, and this is a very, very attractive business with overproportional margins. If we now look at the overall KPI set and the financial results of Palfinger, we can see an increase of turnover by 17.5% to around 1.04 billion euros. EBIT at 80 million. This is an EBIT margin of 7.7%, which went down compared to the previous 6 months of 2021. However, the reason for this is simply that the EBIT was impacted by the cost increases on the other hand, and the price increases only had a deferred effect due to the long-lasting order book. The net income with 39.2 million is also important to mention here, especially due to the fact that we have a stable dividend policy of 1/3 of our net income. If you then go to the next slide, you can see that in 2022, our investments went significantly up. We clearly believe in our midterm target, in our Vision 2030, and this requires a certain level of investments, and this is what you can see on this slide. Our balance sheet obviously was impacted substantially by the supply chain problems. So our net debt went up due to the fact that our working capital went up dramatically. So you can see that net debt increased quite substantially. If you then look at the interest rate, you can see that our financing structure is extremely attractive, very low interest rates, so very stable financing structure, but still net debt has gone up significantly, and this is a major focus point in the months to come. So if the supply chain stabilizes to a certain extent, what we can already see and what we expect, we should be able to reduce substantially here the working capital and also bring down the net debt. If you look at the last line of this slide, you see that the equity position went up only slightly, which might be a surprise. The reason for this is that in the last months, we on the one hand reversed the gross holding with Sany, and we also acquired some minority interests, which reduces for technical reasons the equity, which of course has then a negative impact on the balance sheet KPIs, as you can see on this slide. Let me just focus on line 3 here, change in working capital. So obviously this was the big impact on our free cash flow in the first half year. As I mentioned before, this will be a clear focus point in the second half year to reverse this trend. The only thing we need is a certain stabilization in the external supplier environment, and this is what we can already see to a certain extent. Let me now come to the outlook for 2022. So we have at the moment a record order backlog which extends already into Q2 2023. On this basis, we are quite confident that we can reach a revenue target of 2 billion euros in 2022. Of course, there are a lot of volatilities and uncertainties around, but based on our order backlog, we are quite confident that this is a realistic and achievable target. What is also important that further price increases will take effect in the second half year, which will help with our profitability to a certain extent, but clearly also some cost increases will also only take place now in the second half year. And what has been already a focus in the past quarters and will remain a focus is clearly the implementation of our strategy and Vision 2030. Our financial targets for 2024 to remain the market leader for crane and lifting solutions, to reach 2.3 billion euros of turnover from organic growth, to reach an EBIT margin of 10% and a ROCE of 12% remain unchanged. Despite of the volatile environment, despite of the uncertainties, we are confident that we can reach those targets. Finally, I would like to refer to our Vision 2030. We have a clear target to reach a turnover of 3 billion at the latest by 2030, still being the clear market leader for crane and lifting solutions. This vision is based on 2 strategic pillars. On the one hand, go for solutions, which means that we focus much more on the complete package. So especially having in mind what the introduction of electric trucks will mean to the industry. It's not sufficient to focus only on the crane or lifting equipment, but we have to take care about the whole package for recuperation, integration, etc. So this is a very important change we will address actively in our strategy, go for solutions, and obviously to benefit from the possibilities of digitalization is the second pillar. All those strategic initiatives we are focusing on are based on our strong roots, our strong brand, and clearly on our commitment to sustainability. Thank you very much for your attention. Stay healthy.